All right, you guys. So, in this one, I want to talk about why the majority of investors end up failing and end up losing money in the game of investing. And then I'm going to go through kind of what I think you should do to increase your odds of winning. So let's start off with why the majority of investors fail. You might think they're just making bad investments, and while that does explain a lot of failures in the stock market, I think there's a little more to it. So the number one thing I think that that puts people in a place where they're almost guaranteed to fail. I don't want to say guaranteed, but pretty darn close to guaranteed is they have a short-term outlook. They want to make money way too fast. And if that's your outlook, if that's the game you're trying to play, then just go hit the casino. Go play some blackjack, play some slots. I mean, that's instant right there. You either win or you lose, and you know pretty quickly. So I think having a short-term outlook when it comes to investing is not a good idea. And I, especially for the investment strategy that I have, you need to expand your time horizon when it comes to investing. If you're looking to just make a quick buck in a day or even in a week or a month, it tends to be very risky in the stock market with that kind of time horizon. But if you expand that time horizon and you think out years or even decades, your odds of winning increase dramatically. So that's first and foremost is people just have way too short term of a mindset when they go into investing. They're trying to make money way too quickly. Also, I think people just lack the knowledge. When they first get into investing, oftentimes maybe there's an event that happens and they read about it in the news. The one that comes to mind, of course, is GameStop. I remember how many of my friends were reaching out to me when GameStop was going parabolic back in 2021, and all of them just wanted to get into investing, and they didn't really know much about investing other than they could buy GameStop and make millions. Like that's all they knew, and they just wanted to dive right into it. So I think getting an understanding and kind of a foundation of knowledge in regards to investing in stocks and the stock market and how it all works, I think that's imperative in order to achieve success with investing, because you need to know how things work before you get involved with them. Because while there's always going to be questions that come up and you're always going to continue to learn, you need to have a general understanding of how things work and what you're doing with your money before you actually get involved in it. So I think learning the basics of the stock market, learning how it works, understanding how the account actually works, understanding the basic lingo, I think that's all really important. And I think a lot of people just dive right into it without having that understanding, and they end up making mistakes again because they just didn't have that foundation of knowledge that I believe they should have. So the third and final reason why I think most investors fail is because they get scared when the market dips and they sell out. This is so common, especially with new investors, but even seasoned investors. Like it's crazy that people, you see the market go up and drop all the time, yet people still feel the need to sell their investments when they see a dip in the market. And I'm just like, this kind of ties into the whole short term outlook thing, but you're thinking too short term. If your investment is a good investment, 5 or 10 years from now, it's probably going to be performing better than it is right now. Like if it's a good company or you're in an ETF or an index fund that's diversified and it's an industry that tends to grow over the course of years and decades, you should be fine. There's no reason to get out and sell when the market dips. If anything, you should be buying during these times because everything's on sale. So I don't get why people continue to do this. It's like even people who understand the stock market and who have been doing it for a while, they still get emotional and make irrational decisions and sell during market dips or hard times. And I'm just like, I'll never understand it. It just doesn't make sense to me. That's the time you want to buy. You want to buy stocks when the market dips. You don't want to sell. So now comes the question, well, how do you win in the stock market? Well, nothing's guaranteed. No one ever knows exactly what's going to happen in the stock market, but a lot of you know, winning in the stock market is just going to entail doing the opposite of what those people are doing that are failing. So you got to have a long-term outlook. I think 5 years minimum is what you should have in mind when you buy a stock or an index fund or really any investment. If you plan on selling within the year, you're trading. You're not really investing, in my opinion. So I would recommend at least 5 year outlook on your investments. Preferably, the best investment is one that you never have to sell. If you could just own an investment and it continues to grow and pay you dividends over the course of your entire life, that's the best investment there is. You continue to receive income, it continues to grow. You don't have to pay capital gains tax because you never sold it. That's the best investment there is, the one that you never have to sell. Also, as I mentioned earlier, you got to buy the dip instead of selling, man. Like if the market dips, if there's a big event like COVID or the housing market crash or something going on in politics, and there's, Trump and Elon are arguing and Tesla drops, if you're a Tesla investor, that's when you want to buy. That's an opportunity for you to get in on a stock that you believe in at a cheaper price based off of just market emotion and temporary fluctuations in the stock price. I mean, at the end of the day, it's an opportunity to buy. You don't want to sell when the market's down or when the stock is down. That's when you want to buy if you believe in the company. And finally, the key to winning is making smart and sound investments. And this is a lot easier said than done. Obviously you want to make sound investments and good investments, right? That's the reason we all get into the game of investing. But people will say that, but then they'll go invest in 2 or 3 single companies and their whole portfolio is based on 2 or 3 companies, or they'll invest in penny stocks, or they'll just trade like shit coins and try and make like millions off that. So people will say they make sound investments, but then they go and risk their money in the riskiest assets there are. So I've mentioned this on my channel before. If you haven't seen any of those videos, my favorite investment is the S&P 500. I think most people would be best just investing in VOO, which is Vanguard's S&P 500 index fund. It basically mirrors the S&P 500. So as soon as you buy a share, you're basically purchasing a small portion of the 500 largest companies in the stock market. It's the best way to diversify your portfolio. You're basically investing in the United States when you invest in the S&P 500. In my opinion, the United States is going to be around for a while, and it's probably going to continue to grow the same way it has in the past. I think it's a safe, sound investment, and that's where a lot of my money is. So that's what I think, man. You should be, making smart investments, and ideally it's going to be the S&P 500, a total stock market fund, maybe the NASDAQ. I'm also a big fan of SCHD, which is Schwab's dividend ETF. That's all legitimate companies that are earning real net income and paying out dividends every single quarter. Just smart investments, man. Don't try and make it big overnight. Don't try and be a millionaire. Just trust the process, and you should come out all right on the other end. So yeah, that's pretty much the reasons why I think most people fail at investing and how I think you can increase your odds of winning. As I mentioned, my strategy is really just investing in the S&P 500, other ETFs. I do have some exposure to some single equities, mostly Tesla. I'm a firm believer in Tesla. I do have some slight exposure to some other companies as well as crypto, but again, those are really, really small portions of my entire investment portfolio. It's an amount that I'm willing to risk, and quite frankly, if I lost all of my money in crypto and those single companies, I'd still be all right, because again, the majority of my money is in safer, more diversified index funds and ETFs. So that's pretty much what I do. And I take advantage of, retirement accounts. I buy the dip when I see the opportunity. I consistently buy and invest in the funds that I've held for a while, and I will continue to do so. And at the end of the day, you just got to trust the process, and it should all work out for you. So that's why I think most people fail at investing, and that's how I think you can win at investing. If you guys are new to my channel, I post every Tuesday and Thursday at 3 p.m. Eastern time, and then Saturday at 10 a.m. Eastern time. And if you like this kind of content, I post about, stocks, stock market, investing, personal finance, life experiences, credit cards. So if you like that kind of stuff, be sure to like, comment, and subscribe. And let me know what you guys think. Like, why do you guys think people often fail at investing? Is it because they have a short-term outlook, or they're not, as knowledgeable in the world of investing as they should be? Or is it because they just sell out when the market dips? Or is there other reasons? So let me know what you guys think, and yeah, let me know, and I'll see you guys in the next one. Peace.